Hello, everyone. James Dobson here, your friendly neighborhood realtor. The first graph I got up here for you, let me preface this by saying happy 2023. I hope this year is a great year for all of you. And if you ever have any questions, please don't hesitate to reach out. All right, without further ado, let's jump right in. First, we have real estate prices. So this one's an obvious one. We're still in a decline, I'd say relatively, but it looks like we've plateaued a little bit, which is to be expected. I think the interest rate shock kind of got accepted by the market. Things are leveling off a little bit. We might have, because inflation is also leveling off a little bit, I expect that we might have a few more small interest rate hikes, but I don't think 80 to 90% of the hikes are already behind us, which is good for the market. So price is down about 300,000 on the average price. Pretty crazy. But again, the run up was also pretty crazy. This is an interesting way of sort of putting that into perspective. This is the price change. So this 0% line, if the blue line was at that zero, it just means prices did not change whatsoever. But you can see that prices did decline, but now they're coming back up to that zero line, which is good. We want some stability more than anything else. Some volume is up and then volume is down, prices are up, prices are down. With the interest rate hikes, the market did go a little bit crazy, and I think everyone would love to see things calm down a little bit. Sorry about that. All right. Now we have Toronto Metro price change. So this is from the peak in blue and year over year in orange. And I want you to focus on this second one here. So we had 21% decline from the peak, which isn't even really considered a recession yet, and then only down 9% year over year, which I would venture to say, in the general scope of markets, that is normal. That's average. That's statistically only 2 years of growth in Toronto. And yet everyone seems to be going a little crazy. It's just because it hasn't happened in a long time that we've had negative years. But that's okay. That's my own spiel. All right, that's pretty much it for prices. The rest of the stuff is going to be interest rates, population, more demographic stuff on where the market could be going and what forces are driving that. So here we go. We have rates. This is always an interesting one to look at, and something particularly interesting has happened. You'll see that these two lines have crossed for the first time in 2 years, 3 years. What are these two lines, and what does that mean? We have blue is your fixed rate, orange is your variable rate. The important thing to know when your fixed rate crosses below your variable rate, what that means, or at least what I take that to mean, is banks believe that rates are going to come down. And that's why they're lowering the fixed rate, because so you can see the 5-year term. If they think that rates, for example, are going to be in 3 years around 2.5%, that would cause the bank to lower the fixed rate closer to 2.5%. They're still going to make more than that in that period, but without going too into the weeds, that's what that means. When you see fixed price coming down, it's because the bank's forecast for the Bank of Canada rate is coming down, and variable should follow eventually when the rate actually does come down, if it ever does. Which sort of leads into this next chart, which I know it can look daunting. A lot of squiggly lines here. But the two main ones are going to be the blue and green. So the overnight rate is what I was talking about. That's mirrored by the Bank of Canada rate. And you can see it's gone crazy. We're up to the same level that we saw in 2008. And it all happened in 7 months, which is pretty crazy. And with that came a huge increase in bond yields. And you're probably thinking, like, James, why is that important? They're bonds, they're not real estate. However, it's important to remember what drives real estate investment because it's hard to gauge what percentage of the Toronto real estate market is investors versus residential. However, I'd venture maybe what I've heard is 10 to 15%, maybe around 10%, which I think is realistic, maybe a little bit higher, who knows. If those investors start to say real estate's a little bit of work, and well, if you take out any of the work that a real estate investor would do, so hiring a property manager, what you start to get is a comparison to bonds in terms of your return. So if you bought real estate with cash, no mortgage, and you hired a property manager, you could expect to make maybe 3 or 4%, 3 to 5% annually, which is coincidentally right where the bond rates are right about now. The primary difference is you don't get the same appreciation on a bond that you do with real estate, but the fixed income component is very similar. So a lot of those bigger investors who are looking for monthly returns might be moving to bonds, which could cause an exodus from the real estate market. Just speculation and hearsay at this moment, but it's something to consider. Next is population growth. And this chart is the one thing that's stopping me from being totally doom and gloom, right? You're like, well, shit, if bonds are such a good investment, why would anyone invest in real estate? That's not what I'm saying. But on the other side of that argument, you have, well, even if everything stayed exactly the same, the government of Canada is letting in 865,000 people into the country, which is crazy. And if I scroll down a little bit more, you'll see Ontario in Q3 2022, according to Statistics Canada, is let in over 400,000 people to the province in a quarter, which seems insane. Where are they all going to go? Which is the next part of this. Where are they all going to go? So 30,000 housing completions and 100,000 units under construction, with roughly 30,000 of them projected to be completed in 2023. Doesn't seem like enough, right? It's still a really high estimate, and of course it is an estimate. I would venture to say that a lot of these projects will get canceled in this year just because of where interest rates in the market has gone. If a developer, if a lot of people are going to default or not close on a property because of circumstance, they might just cancel the whole thing altogether, as opposed to trying to resell those units later. So, I mean, I fundamentally believe that at the rate that we're letting people into the country, our infrastructure is not enough to sustain that. So schools, hospitals, and real estate. And so that one piece of information alone kind of discounts everything that I've been saying. Forget interest rates, forget bonds, whatever. If there's not enough homes to go around, what's going to happen? Price is going to go crazy. Price is going to go up purely on the supply and demand curve. Something to consider. So I guess what I'm trying to point out here is we have quite a few macro forces at play here. Nobody knows what's going to happen. What we do know is that historically, the prices usually go up over time because land gets more scarce and population grows bigger. That just leads to higher real estate prices in the future. When you consider Toronto and Canada as a whole sort of being put on the world stage in the past 10 years, that could bring even more people in. So I wouldn't be too worried. I don't think we're going to see I don't think we could see a 50% decline in real estate prices, for example. I don't really think that's, I shouldn't be saying that on a recording, but I just don't really think that's possible. I think we could see 30% declines. That wouldn't be out of the question. And since we're sitting at 10% year over year and 20% from the peak, I'd say most of our downside is behind us. What we would see, I think the likely outcome of all of this is sideways, where rates stay elevated, prices stay depressed and volume is relatively low as well. And what that would mean is we're just more in a balanced market, because the important thing to remember is that the past 10 years has not been balanced. It's heavily favored the seller. And so now we're finally in a time where buyers can negotiate. So this is a blessing. As much as things feel weird and the future seems uncertain, which it hasn't for so long, use this time as an opportunity. And if you have any questions about that, let me know. I'm happy to do some investment strategy or just your personal strategy as to what makes the most sense for you. And before I let you go, because how are we doing for time here? 10 minutes. I yap on sometimes. I do want to talk about rentals because I got a lot of renters out there. Represent. Condos. So we have green is detached, blue is condos. Detached have actually been on a decline since July, and condos on a decline since October of 2022. Could just be the winter. I think that, you know, summertime and September are usually when rentals can get heated. I wouldn't be surprised if that happened again, just because of the whole burden that was put onto the rental market when interest rates climbed. So we'll see. We'll see. And then lastly, just Toronto Metro rental months of inventory. We can see we're climbing a little bit, but we're still sort of in this range. I haven't seen anything crazy in terms of rental volume beyond some seasonality stuff. So yeah, there you have it. If you have any questions, please don't hesitate to reach out. Have a great 2023.